What's up, guys? Welcome back to the Kingdom. We are here for another amazing podcast. I am joined by two amazing individuals. We are joined by Michael Saylor's cousin-in-law, once removed, New Fish Big Pond, who is all about cryptos and Bitcoin and everything else. So excited to have New Fish Big Pond back. And I'm also got back here with Purunga, the animal man himself from last week, who can trade spreads and sell options, just like you do at the safari. Fish, how you doing today, man? Ready for another week of the market?
Oh man, I'm ready for the ups, I'm ready for the downs, I'm ready to trade the charts in front of me.
All right, love to hear that, man. Purunga, how you doing, man? You ready for another week?
Yeah, ready. Great intro, by the way. But yeah.
Yeah, I feel like I had to think of a name. I mean, you're basically like the Safari guy because you talk about all these different like selling options here. I had to think of one for Fish, and I was like, dude, I'm just gonna call him like Michael Saylor's like cousin or something like that because this dude knows like so much about Bitcoin. So I think I might as well have him related to Michael Saylor somehow, right?
Yes.
Dude, you had me rolling with both of those. I was thinking back to last week with Purunga's, jaded zebra, dragon, unicorn spread. Like, don't forget the dragonfly jumping jack straddle, and
Yeah, man, absolutely, man. So we got a lot to talk about here on this podcast here. So if you're tapping into the Kingdom, thank you guys so much for giving us your time here on this beautiful Sunday evening. This is beautiful in my area. I don't know about you guys, but nice weather over here in this area. So we got a lot to really talk about here. First thing we're looking at is the calendar for all the economic data. Like the market last week, like we started off hot. I don't know about you guys. We started off in a pretty good spot. If you take a look at the screen here, we had GDP came in better than expected. I was like, oh, cool. We're going to be in for a great time in the market. And then just Friday just got absolutely hammered with awful jobs reports here. So, Fish, I know you like to talk about the BLS. We had the new firing of the commissioner or the process of being fired as the commissioner. We also had a Fed governor step down same day. Fish, would love to hear your insights as to what you think about it. And I'm sure you have a great opinion about it. So take it away. What do you think about the BLS potential firing and the Fed governor stepping down?
Right. Well, you know what? I'm gonna start off by saying my thoughts are very, very short and very, very simple. This is a bunch of nonsense. It's unheard of. I am shocked. I'm appalled, and my thought is that it's going to do some serious damage to our country economically. What I've been reading, as far as in the Wall Street Journal and in Bloomberg, is that now none of the foreign investment and domestic investment is going to be believing our data reports because they now understand that the data reports will be fudged. The numbers will not be correct. Whoever is in charge of reporting the numbers will, in fact, be a yes man to the administration or a yes woman to the administration. And so nobody's going to believe the numbers. It's going to cause more uncertainty in the market than we've already been experiencing. This is not a good thing, y'all. The BLS, the Bureau of Labor and Statistics, as well as the Fed, they are supposed to be independent agencies. That's the reason why they're trusted. When you throw political yes men into the head position of these organizations, it makes it really, really, really difficult for folks to believe that the truth will be reported and not propaganda. That's what I think. That's also what I've been reading. Yeah.
Yeah, man, 100%. And the way I look at it now that you've been talking more about it, Fish, is that like think about it in this way now, right? So you can look at this in two perspectives of things, but either way, it just makes the U.S. lose so much credibility. Either what you were saying, what you've been reading about, what people are saying is 100% true, where it's like now we're going to look less credible because we're putting a yes man in charge or a yes woman in charge of that position there, which could be on the side of the Trump administration more or less, and be just saying yes, 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 yes. And then that's going to make it, our reports and our credibility also have a flaw in it. Or if you also think about it this way, what if the numbers were flawed before and now we got somebody else in charge now? So now even if the numbers, quote unquote, were flawed before, that still makes us lose credibility as a country comparatively to other countries, because you were fudging your numbers before. Why should we believe you now? So it's like you look at it either way, and it's like it doesn't matter which way you look at it. It looks like either we go from fudging the numbers to not fudging them, which is still bad and against our credibility, or we go from not fudging them to fudging them and we still lose credibility, right? So like at this point, it's just like I'm not going to believe literally anything you say because of those both sides, if that makes any sense, Fish. I'm not sure if you kind of followed my logic there a little bit, but
I absolutely follow the logic 100%, and it makes complete sense. Absolutely. Which time were we right? Were we right now, or were we right before?
Yeah.
And the problem, in my opinion, and I mean, I try to speak here non-politically. I try to stay market only. But the problem, in my opinion, is that there is a lot of distrust in the current administration. There's a lot of trust in the current administration. Absolutely, I will absolutely say that. But there's a lot of distrust in the current administration as well, both foreign and domestic. And when you compile all of the distrust along with this firing of the head of the BLS, along with the public feud with Jay Powell, I mean, how are people really supposed to feel about it, man? Come on. Are they really going to feel like we're getting it right now, or are they going to feel like we're covering up? Chances are they're going to feel like we're covering up.
Either way you look at it, like it's a lose no matter what because of this happening on Friday, right? So with the firing of the BLS commissioner, now going to be, I don't know how long it'll take. I don't know what the process is for it, but now they're going into that. Now we also had a Fed governor step down, which is a very coincidental thing that one of the Fed governors steps down as soon as, like literally like a couple hours after the jobs data comes out, and it's a big miss. Like it's really interesting. If you look into articles, she was not at the last Fed meeting that was the decision about what to do with rates. So it really just makes you think about like what is going on behind the scenes, what is that stuff that's going on here, and again, we're going to lose that credibility. And it's just like what we would think about in general. If the U.S. loses that credibility as a nation, as a country, for our economy as one of the strongest, the top one of the biggest and most baller economies we have in the world here, you start losing that credibility. Where's the money going to go? Not into the U.S. It's going to go elsewhere, whether it's China, whether it's India, whether it's somewhere else. Like our money, that money's going to be flowing out of the U.S. economy because it's your credibility. It's just like when they had the rating downgrade of the credit rating from like a AAA to AA plus, right? Those things create these tiny little shocks in the market of being like, oh no, we can't trust the U.S. economy as much to pay back their debts. Very similar logic here, where the credibility that you lose as a country and as a nation, as an economy, people are going to go just take their money and move it elsewhere and just be like, I know my money can be more reliable here than it is over in the US. And that could create a huge problem for us, I feel, in my opinion. Purunga, I know we were trying to talk about this beforehand also. Do you have any like additional thoughts, anything you want to add to this kind of idea about what is going on here? I don't know how much insight you would like to add to that, or do you have any commentary on it, Purunga? Let me know what your thoughts are.
Yeah, I don't have much to add on what you guys are saying, but it's not if we can't trust. That's for sure.
Correct. And, it's one of those things where like a lot of people, will always write comments. You go on like Yahoo Finance when data comes out, you go anywhere and it's like, this data is manipulated, this data is manipulated and all this kind of stuff like that. And I think what kind of really, really sucks in terms of where we're at is that like, if the data is, like, if you think the data is manipulated, then where else are we going to have to get the data from? Like we don't have any good sources to get the data besides what we're provided, unfortunately. So it's kind of one of those things where it's like we don't really have another source to go to for the data, right? Like unless you want to be the one to go around and ask every single person in the US about their labor and what job they have, it's just not feasible this time. So you kind of have to either take every data point with a grain of salt or just have the full confidence that we're being, 100% transparent. And that's kind of where I think the divide is going to be for us overall. I know we looked at, our non-farm payrolls, we had the revisions, and again, they were big misses, as you could see. You know, we missed it by 33,000 non-farm payrolls in July, but it wasn't even that. It was the revisions that were awful. I know, Fish, you were talking about what were the numbers for the revisions? It was about
It
what?
was, I believe, I may be mistaken, but I believe it was a 3-month revision from creating 250,000 jobs to creating 35,000 jobs. And
Yeah,
that was the catalyst to have the BLS chairperson removed. Damn, I wanted to cut in because you were talking about not being able to trust any data. Who's going to collect the data? Mrs. Fish and I were talking about this earlier today. She brought up a really decent point that I was like, wow, of course, because we looked for that data. Why didn't I think of this? Because I'll tell you why. Because I was so hung up on this BLS thing that I wasn't thinking broader, right? I need to take
yeah,
the horse blinders off and get the broad vision, not the tunnel vision. So Mrs.
right.
Fish says to me today, she goes, well, yeah, she goes, everyone will just depend on the ADP numbers. And I was like, babe, you're, pardon my language, babe, you're fucking right.
Yeah.
So that's what everything's going to have to be going on is ADP numbers. Well, then what's going to happen? ADP is going to be scrutinized.
Right.
You
Yeah, and
know,
that's where it all goes to, right? If you're telling everybody to focus on one thing, everyone's going to nitpick every single data point. You're going to see that, like, where'd you get this from? How'd you come up with this? Where'd this come from? It's like all those people that are nitpicking every little thing possible. But like, chances are, 99% of us who look at this data, like, we don't know how they collect in terms of, like, we don't get to have like a GoPro camera put on the people who are collecting this data, and we're not seeing like where it comes from, where they're getting it from. We don't have that kind of first POV experience to see where it comes from. So it's kind of hard to
right?
nitpick. You don't even know where it's coming from. Like, you're not following them along. You don't know how they're collecting data here.
But do you know? But do you know what's the beautiful thing about this?
Yeah.
And I'm not even joking about this, guys. Volatility. When the market gets volatile, it gets exciting because people start getting scared. Right?
Mm-hmm.
IV goes up. You can make a lot of money really quickly if you're on the right side of the volatility.
Oh, absolutely, man, 100%. Let me tell you. So in the comments, so let me tell you guys right now, right? If this podcast gets 100 likes, we got a petition for Mrs. Fish to make a guest appearance on here one of these days. I don't know when. I don't know if she'll be up for that or not, but maybe if we can get 100 likes, maybe we'll give her enough of credibility to get her on as a guest appearance. Maybe one day, Fish. We can pay her handsomely. I can reach into my piggy bank and take a couple of dollars out and give her a nice little stipend pay for her to take the time to talk to us one of these days.
Look, you guys already pay. The Kingdom pays Mrs. Fish very, very handsomely because I'm locked into the Kingdom Monday through Friday during market hours. So that gets me out of her hair. So she's
Nice.
real appreciative of the Kingdom.
Yeah, that's absolutely awesome. So it was really interesting. So, I made a video about this earlier about how we talk about the jobs date and how important it is, right? And there's a lot of like different scenarios to really think about what's happening here. So clearly, like, these revisions are atrocious. And to anybody who's listening who has no idea what the point of the revisions is, when you have something like initial jobless claims, the keyword there is initial, right? Because you might not get all the data points that same time. You might get data coming in a little bit later on. So we have initial jobless claims, and then what'll happen is as more and more data comes into fruition, you get those revisions, right? So they revise the data to make it be more precise and more accurate as time goes on when more and more data comes in. So usually you'll see revisions. It might be like maybe 10,000 jobs less, or maybe like a little bit of a bigger number here. But the fact that we went from 250,000 down to like 30,000, like, that is a huge difference in what's going on here. And so that's a huge crack in the labor market right then of itself. And that's why this market freaked out on Friday and was like, what the heck? And if you take a look at interest rate predictions, now I don't know if you guys saw this, but we went from when Jerome Powell spoke at the FOMC on Wednesday, it went from 65% chance of a rate cut down to 45. Now, I don't know if you guys know what it's at. It's at 80% chance of a rate cut in September from 45%, only because of this jobs data on Friday. They had that much of an impact on what the markets are not going to price in now, which will be, a rate cut in September. And people are thinking that it's bullish, but rate cuts aren't bullish in the economy. Like, they're there to stimulate the economy, and they're there to help keep the economy going when they're on hard times. So rate cuts aren't all sunshine and rainbows. Like, oh, I'm so excited. Like, it's going to be better to borrow money. It's like, it's not made for that reason. It's there to try to help keep the economy afloat before going to a recessionary period. It's usually where they come from. So very interesting to see how the market reacted to that one. So we're looking at now an 80% chance of a rate cut in September, guys. What do you guys think about that? Any thoughts?
Haruga, you want to chat this one up first, or you want me to go? And...
I'm teeing it up for you.
Yeah, I mean,
I'm like Jerome Powell.
It's hey, yeah, I think maybe people might be bullish on it, but yeah, it's not really exactly bullish news. But yeah, I don't have too much. I mean, it's going to help like small caps if the rates go down. But
yeah, I mean, what you will notice actually, fun fact is that if you were watching Open Door, the meme stock of whatever, Open Door had a huge pump right after I think that happened. I could pull it up for us, take a look and see. I believe though we had a big pump afterwards.
I love that stock, man. I made, I don't know what, 200 and something % on that. And I was like, okay, I guess this is where we sell. And then I sold, then it went down the next day. I was like, oh, good thing we sold. All right, cool.
Right.
I made
so
like
take a look.
300%.
Yeah, so like Open Door is up, we're looking at they were up 14% today. So the minute that data came out, then people started and they started to think about like what's happening here. Open Door skyrocketing in price. Why? Well, Open Door does real estate, right? They make their money from flipping and selling houses. And it's when the rates are lower, it might become a buyer's market and people could be buying more and more and more, and they could be able to flip their houses off and get off for a profit. So Open Door rallied pre-market because of that. Another one that rallied pre-market was rocket companies as well, because they do mortgages and stuff like that and real estate deals and all that kind of stuff. So again, the same thing. When a rate cut starts getting priced in and they start thinking about it's a huge prediction or it's going to be a pretty good chance of it happening, this is actually what happens. So it's very interesting to see like these kind of companies are moving in the stock market because of this huge move from a 45% rate cut to an 80% one. That's a huge move. So what happened? Rocket companies up 12%, Open Door up 14%. Those ones that are heavily impacted by real estate and interest rates get those big moves. So something to keep in mind about when you think about interest rates and where they're going. Open Door and Rocket really do rely a lot on those interest rates because of the real estate. It makes a lot of sense. Fish, do you want anything else to this before? I have another thing to bring up also with Jerome Powell, but I want to see if you have anything else you want to add to it first.
So as far as rate cuts are concerned, yeah, they look great in the immediate future. Hey, I'm going to save 25 basis points, and it's going to be awesome. My credit cards are going to go down. The interest is going to go down a little bit. I might be able to get a better, slightly better rate on a mortgage or a car loan. I might have a little bit more disposable income right now. That's great. That's awesome. Guys, it's not here to last. It's not. It's something to fight inflation. And if you keep cutting, it's a tool that is used to fight inflation. If you keep cutting, if you go the 3% like Trump has said that he wants, yes, it would be crazy good for the economy for the first 2 to 4 years. And after that, it would send us into a 10 to 15 year tailspin. Cutting rates is not a great thing. It's just not. People don't understand that. They really, really need to. It can be good at certain times, but when those times are manufactured, like I believe they are now, then no, that's not the appropriate time.
Love that. So let me ask you guys this, right? So did you guys have a chance to listen?
Oh, and wait,
to...
I'm sorry. First, I just need to piggyback off of Peruga here when he said that lowering rates is good for small caps. 100%. We know small caps boom when interest rates are down, right? It's very simple. It's much cheaper for them to borrow cash because most small caps are burning cash. They're not profitable. So they need that cheaper rate. It's also much easier for them to get venture capital money when interest rates are lower.
100%. Purunga, and that's what's up. That's why we bring Purunga in here, not just for the animal plays, but also for the small cap thinking here. And that's what I love about having Purunga here. 100%. I almost walked over that one. So Fish, thank you for bringing that back up to the attention there.
It's super important.
It's very important. Yeah, because it is true, again, and that's kind of what people I think forget about is like, interest rates being cut are good because, my mortgage is a little bit cheaper, my credit card, like you're saying, a little bit cheaper, I can borrow money cheaper. But the real reason behind it is you cut rates so that these companies are able to borrow money at a cheaper cost. And then what can they do with that cheaper borrowed money? Well, they can expand their business. They can hire more people. Hiring more people is to help boost employment, right? To get the employment numbers going. Then when more people are working, then they put more money back into the economy, and it stimulates the economy. It pushes the economy farther because now they're spending and now there's money flowing back in. But again, if there's money flowing in and we're already seeing a potential raise in inflation because of these tariffs, it's just putting fuel on the fire. The fire is the tariffs and inflation, and the gasoline that you're putting on it would be rate cuts because it's going to just push inflation higher because there's even more money being pushed in the economy. It makes things be a lot cheaper or things be, a lot. It's going to make more money being spent, stuff like that. It just doesn't seem like it's a good time. And that's what Jerome Powell's thesis has been, is that if tariffs keep pushing inflation higher, rate cuts is an awful idea. I don't know if you guys listen to this, but on Wednesday, Jerome Powell said, and I quote, "You guys are fortunate that we didn't do a rate hike." I don't know if you guys knew that. He said that. He's like, "You're fortunate we're not doing a rate hike right now." Did you guys know that? He said on Wednesday?
No, I did not.
No, I did not.
Oh my God.
Yep. He literally says it. He says, and I quote, he goes, "We could have done a rate hike." Because again, he's trying to control the spending and try to control that inflationary pressures. And the minute we see that tick up in inflation from tariffs, he wanted to combat it. He's saying we could have just raised rates if you wanted to. And I was like, "Whoa, dude, you got to calm down here." Like I was sitting here thinking you're going to get a rate cut in September, and he's going to tee it up and just line it up, say, "Hey, rate cut in September, we're doing great." But he was like, "You're fortunate we don't have a rate hike." What are you talking about, dude? So that's why the rate cut prediction dropped 20% that day. And then it came back up because the labor market was absolutely atrocious. So now it's just like one of those things. And I think someone made a really good point here. I'd like to hear you guys' thought about this. I forgot who it was, but I was listening to somebody on one of his videos about this, and it was really good insight. He goes, textbook definition of tariffs, right? Tariffs are known as a one-time thing. You put tariffs in place, it pushes inflation higher for a little bit of time, and then it all comes back down later on. It happened when Trump put tariffs in 2018. It's happened when tariffs have been put in the past. And he goes, this time it's different. The difference this time is that it's not just rip the Band-Aid off in April and just let it play out. It's they're on, they're off. They're on, they're off. They're here, they're there. They're 30%, they're 10%. And that's not a one-time tariff anymore. That is just like a who the heck knows, like a roulette wheel kind of thing about what's happening. And that's why Trump or Powell said, he goes, this is not a one-time event here. Because of all this delaying and all this speculation and all these flip-flopping, he goes, this is not a one-time thing anymore. So the Fed is literally stuck in like, what do we do at this point? We really can't do much. They could have probably acted sooner if tariffs went into place April, and then May, June, July didn't come out. They probably could have had a much better indication as to what to do now. They are literally in no man's land right now. I don't know what you guys think about that, but I think it's logical. It makes logical sense to me that like they can't do anything. They're lost. Like it's unbelievable.
So I'd just like to remind everyone that so it's so easy to get caught up in, well, this happened and this just happened and last week this. But guys, we need to remember the bigger picture, right? We remember Jerome Powell coming out months ago and saying, well, you know what? We could cut rates and we could go ahead and say and try to give the economy a little bit of respite here. But we're not going to do that because this is a manufactured crisis due to the tariffs, and which were not necessary. And if the threat of the tariffs never went on, we wouldn't be in this situation. There's an easy fix. The tariffs can come off, and we'll go right back to where we were, right before the tariffs were mentioned. So,
correct.
due to that, Jerome Powell said he's not going to do anything about it. Guys, we don't know what is going to happen at the next meeting in September. You know, when they say they want to cut rates, we got no idea, right? Because they may still be under the same thesis of, well, you know what, we're still in this manufactured crisis with a very simple solution, which is to remove the tariffs.
Correct. And I know that there's there's articles that came out recently about how right now tariffs are in the appeals court right now. So, the ideal situation, before we move on to stocks and take a look at earnings, stuff like that, the ideal situation, honestly, from my perspective, would be tariffs get stopped in the appeals court, they get thrown out, we stop the whole thing before the labor market gets hit any worse. This was the first ding of many potential dings that could come up in the labor market in the next, 4, 6, 8 months, however long it's going to be. This is like basically they're firing a warning shot and saying, there's a problem here. We got to do something about it. This is the first crack of many cracks that the labor market could potentially face. Ideal situation. Tariffs get stuck in the Supreme Court or in the appeals court. They throw them out. Tariffs don't happen, because what will happen if tariffs are taken off the table, like you're saying, Fish? What will happen? Businesses will know exactly what they can do with pricing. They're back to the control of their prices, of their, whatever it is that their products are. Then they can know what their margins are going to be. They're going to know what their profits are going to be. They can then start hiring people if they feel confident for it. The hiring is going to boost employment. It's going to lower unemployment, and it's going to push us back to where we're at beforehand. But
geez, hold on.
But if it's too late, then that's going to be the problem. So we're really we're walking this tightrope, being like, what's going to happen between now and the next couple months out here? And honestly, the ideal situation, just get tariffs thrown out and just be like, nope, we're done here. We can't do it. So Purunga, do you have any insights? I don't know. I know I'm sure you'd be listening to a lot of stuff here. Anything you want to add to this kind of, insight and ideas here?
No, not much. I mean, we'll see what happens with tariffs. That's all. It's a will they, won't they situation. So.
Right. Sorry, dude. I know that you're learning a lot of things. I don't know how much you've gone into like the macroeconomic side of things. I don't know if you're more of like a charts and just like a trader. How much have you looked into like macros in general? Have you looked a lot into it, or not really as much?
Not a lot. I mean, I know I got general information I'm going to be looking at, but I'm not like digging super deep into macroeconomic stuff. But it's good to pay attention to.
Yeah, 100%. And that's what, dude, that's why we're here. I'm going to learn from you about all these different trades. You learn from me and Fish about, what we're looking at macro wise, stuff like that. Honestly, this is a big learning thing. Fish, you wanted to say that before you stepped away for a second. What did you want to say?
I'm sorry. Remind me where we were. There was a small crisis.
Ideal situation. Tariffs get thrown out in the appeals court before the labor market cracks anymore, and we're back to hopefully having a better economy. That was where my main point was.
Yeah, well, so everything that you had mentioned, I just wanted to throw in there. When we increase jobs, folks, we increase discretionary spending.
Mm-hmm.
Right. So when we throw money back into the market, what does that do? That increases share prices. It increases profits. It makes us more money. I mean, that's the name of the game. That's what we're all here for. That's why everyone listening and watching is listening and watching. That's why I'm here. That's why Purunga's here. That's why Fridge is here. Right?
Yeah, dude, absolutely, 100%. So just some crazy things to look at. I don't want to pivot away from that macro side as much and talk about what a lot of people probably here for, which is stocks and earnings and what's going on and stuff like that. But just some things to keep in mind about. I don't know what's coming on the economic calendar this week. I don't really know what's coming up. I don't know if it's anything crazy. I don't think it is. I can take a quick look for us beforehand. There's always going to be initial jobless claims data again. But again, now that you hopefully have listened to us kind of talk about a little bit more, initial jobless claims is always going to be revised when more and more data comes out. I don't really see anything crazy. 10-note auction, I guess, at 1 p.m. on Wednesday. Thursday is your initial jobless claims. Nobody cares about FOMC members speaking unless it's Jerome Powell. There's really nothing. So I think last week was the hard-hitting week. This week's going to be a lot more tame. Last week we also had the earnings of big companies where it was Microsoft, it was Meta, it was Amazon, it was Apple. Do you guys see? Oh, we had MicroStrategy. Can never forget MicroStrategy. For fish, of course, as we know.
Thank you. I was going to throw
Any,
it in there. I'm just saying. I was going to throw it in there.
well, fish. Let's talk about it, right? So MicroStrategy. I saw
Let's
that
not talk about it. I'm joking.
Okay. Well, I couldn't believe this actually. Like their beat was like what, like a couple 1,000% or something like that. It was like an
I don't know.
unbelievable beat in their earnings.
Yeah,
33,000%. Like what is that?
32,000%, I think, or something. I don't know, dude. I mean, look, you also got to remember they used to trade at what? Like, and I say this jokingly. I don't know what it was, but I say jokingly they used to trade at negative 18,000%. You know what I mean?
Right.
So, I mean, I really don't know. Everything's priced in. There's no volatility on the contracts. I don't really know what's happening. You know, they were doing. Sailor has been doing a lot of buying. Sailor's been doing a lot of ATM and selling different bonds and stable coins or tokens or whatever. And he's been raising a lot of capital to buy a lot of Bitcoin, and it's also being shorted. And I mean, hey, look, stocks go up, stocks go down. This is the way that I think about it. All right. My thesis on MicroStrategy has not changed one bit. Therefore, why would I sell? Right. I've also got an exceptional cost average. I mean, my cost average. See, I mean, I like to find deals. I tell you guys all the time. That's what I do. I hunt for deals. So last February, when the market was tanking and everyone was selling, I was buying. And my cost average on MicroStrategy is 246. So, yeah, like I'm not selling.
Basis.
What's that?
Yeah, why would you?
Yeah, I'm not selling. I'll keep it. I'll hold it, man. Trust me, it's gonna go somewhere. I know that it's gonna go somewhere this year. And it's gonna be profitable. You know, but yeah, we were talking earnings. I had Apple 205 puts.
I saw those. Man. I saw those on the he's got on his nice channel on the Kingdom there. I saw it. Did those print for you? They must have, right?
Well, let's just
Not
say,
a print, but
let's just say that when I opened, so I only had one, and when I opened my port on the next morning. Yeah, don't worry, guys. I was only down 83%. Okay. Yeah, I was down 83%, and so I was like, "Well, dude,
on that put option, you're down 83%. Really?
Well, it opened green. Apple opened green. That's why it dropped quick.
Exactly. And so I was like, well, I can't sell this. Like what for an 83? I can't realize an 83% loss. I was like, I've got until 8/8 on this. I'm gonna hold it. Just see what happens. Dude, like Parunga just said, Apple dropped hard. The next thing I know, I'm watching this thing. It goes from red to green, and I'm like, okay, well that's just weird. Like it was down 83%. It goes from red to green. Next thing I know, this thing is positive, and dude, I end up selling it. It's going up and down, up and down, up and down. I end up selling it to make like $150, $160 on the trade.
Nice. That's a great trade, man. Yeah, dude. Apple,
and I gotta say, I want to give a shout out. That was not my trade, man. Elite Joe in the Kingdom, he slid that one over to me during the live trading session. So I want to thank him for that one. That was pretty cool.
Man. And it's crazy because they had a pretty good earnings report. I remember, I'm pretty sure they beat on their earnings and stuff like that from top and bottom line. I'm almost certain for it. Same thing with Amazon. Amazon beat as well, and Amazon was down like 7% for whatever reason. I think it's probably because of forward guidance. Maybe there's mentions of tariffs. Who really, honestly, I had to look more into it. But
AWS.
Okay.
AWS did not have the revenue that they were expecting, from what I heard. And then I'm just telling you guys right now, mark my words. Next Amazon earnings are puts. Telling you, buy Amazon Leap puts for go way past the next earnings. Thank me later. Thank me in 3 months.
You heard it here first. And if it goes the opposite way. Remember, none of us are financial advisors, and we do not give financial advice. So please do your own due diligence before you do any sort of investment. Just full disclosure, as we already know, I know that Royalty, who obviously couldn't join here again, he didn't join his nice little vacation. I know he always says the same disclaimer as well. So Apple had a good earnings, still dropped down, but I think also just dropped down more because obviously of like the jobs data and the whole market came down with it. Like there wasn't really a lot that was green on Friday. Another one that I know we talked about last week on the podcast was UPS. And take a look at the nice little UPS there, nice little just absolute travesty. I don't know if you saw this, Fish, but like
Amazing.
they are
Amazing.
just down. They got absolutely slaughtered on their earnings. You know, they missed earnings, it looks like, and they got absolutely just like, look at this thing. This thing just dropped on earnings right here.
Can I tell you guys something that's really, really funny? Oh my God! So I do this podcast with you guys, and then I do another one, right? And man, 2 weeks in a row, I've been calling out my prediction on earnings, right? And what I thought was going to happen. But I haven't taken my own signals on these earnings trades. Exactly. Oh my God, man. Like I'm making everyone else, money through my non-financial advice, but I'm not making my own money. It's truly laughable.
I saw with UPS, believe it or not, there was someone reported there was an insider buyer. I don't know if it was a CEO or CFO or something like that. Someone bought $1 million worth of shares after this huge sell-off. I think it was on Friday morning, I believe. So very interesting perspective there. But yeah, look at that thing.
No, that makes sense. That makes sense, right? So think about this, right? You're going to buy right now at this low, right? UPS is not doing any business right now. Great. Let's buy now, and we're going to sell high because what's happening in 6 months?
Yeah, you got holiday season. Yeah. Yep.
You got holiday season, and that's when dude's going to sell. He's going to sell right after those earnings that they've shown great revenue.
Yeah. Do you know that I didn't realize this because I invested in UPS as a dividend play like years ago that I got out of it like 2-something. Their dividend payout right now is like 7%. That's like a REIT. That's like a REIT payout. Yeah, I'm not kidding. If you look it up, their dividend payout is like 7% right now because as the stock falls, the yield becomes better because of like how the math works and like that. So as a company gets sold off more, their dividend becomes unbelievably high to kind of counteract it. So that's why people are like, oh wow, this is like a REIT dividend paying stock at 7%, but it's UPS that everybody, a lot of people know UPS, right? So maybe some people could be trying to buy up now shortly because they lock in that nice 7% dividend. If they buy in now, they're getting a 7% yield on top of if they get the potential upside. So could be a interesting play as well.
That's much better than a money market, which is going to pay you 4%, and you're also not locked in like you would be with a T-bill.
Yeah, absolutely correct on that one. Another one that was interesting that we talked about, I think, last week was SoFi. SoFi was bizarre. I don't know if you guys saw about what happened with SoFi. Did you guys see what happened with SoFi last week?
I heard that they beat, but they went down.
Yeah, Purunga. What do you know about SoFi?
Well, they beat, they went up, and then they announced like what a dilution of shares or something.
Yep.
And then it went down.
Great.
It went up like 6-7. It went up like a crap ton of percent, whatever it is. Like it had this huge rally here, and then right as soon as market closed, there were like dilution of shares, and then it just plummeted back to basically where it was at pre announcement of earnings. But then it did rally back up again, and it's because think about it, like the dilution of shares is so they can continue to grow their company and take that money and grow their company. It's not like it's a dilution of like a bad dilution. Like they're a profitable company. So like they're doing a dilution. So I think this initial reaction was like a panic reaction of like, oh my God, what's going on? But then you take a look, it had a nice rally the next like couple days because we're like, oh wow, they're just trying to grow their company, right?
I think people don't like it when you dilute. Like it would put a bad taste in my mouth as a shareholder. If you have great earnings, share price goes up, and I'm like, hell yeah, this is awesome. And then, at 401 or 405, you're like, oh, we're going to unload, 10% more shares. Like, what?
Right. I'm honestly just shocked that they didn't put that into their earnings, honestly. That's what threw me off. Like, they didn't do it. They had the whole conference call. They didn't do it on their earnings call itself. But then the same day, just after hours, they come out and say it afterwards. So just
Right.
very, very, very interesting how they do it that way. I've never seen a company do it that way before, honestly.
That's where the bad taste gets put in my mouth. It seems very shady.
Yeah, it
Even
was
though
very,
even though
very
it's for a
interesting.
good reason. And I like
Mm-hmm.
SoFi's company. I like the CEO. I think he's very smart. I just don't like the way they did that.
Yeah. Well, be something to watch for the future. Barunga, go ahead. What do you got to say there, dude?
Well, there's a reason. There's a reason why they did it that way, and that's not probably a good sign. It's probably why people react that way. So I don't think it's a good thing if you waited till after the earnings call.
Right. Like, why not just do it like while you're on the call and and you have thousands of people, thousands of investors listening. Why not just do it then instead of, again, because maybe they wanted to give the chance for and again, this could be an idea. They wanted to give the chance for people to sell out some of their profits, during the market day. Then they took their profits, probably somewhere around here.
Yeah.
Then the announcement comes out. They then get to buy in lower, and they got to ride this pump. Then they got to ride in this pump. They bought back in after hours, so they
Yeah.
have two chances of that pump.
And was any of that connected to insider trading? Because that'll be neat to look at.
Oh yeah, I that'll be something that we may never see until someone gets arrested for insider trading and they bring it up.
You know what I mean? Because that absolutely sounds like a viable
Right.
alternative. And I'm not really a conspiracy theory guy, but it
Mm-hmm.
it just seems a little odd to me, especially in this
Yeah.
day and age of sort of uh, do what you want.
Yeah.
Is
Well,
the way I put it.
talking about insider trading brings me up this really funny idea or this funny article I read a couple years ago, I think it was, where they arrested some guy for insider trading because he was telling people what was going on over Xbox Live party chats. He got arrested for it.
Wow.
So he was out there like just giving out like signals and then being like, "Oh, like buy this, buy that." And he got arrested. And they were just like, yeah, they had all the logs of like everything over like Xbox party chat stuff like that, and he got arrested for it. I was like, "Oh my god, dude, absolutely
That's
wild." You think you know someone, right?
that's incredible.
Yeah. So all right. Well, so SoFi we covered. Amazon did good, but you had the AWS, which had to sell off like 6-7%. Apple beat, but had a still maybe not as much of a beat. Meta, I know, had a huge run up. I think right. Meta was up like 11% after their earnings. If I'm not mistaken. Look at that. Meta had a great earnings report.
Mm-hmm.
Hey,
I don't know if you guys read much into that one.
my ADD won't let me just pass this up. You just said Apple beat, but it sounded like you said Applebee's. And I just want to throw out there when Applebee's has earnings, I would be bullish on Applebee's.
Oh, dude, I used to love the unlimited riblets and tenders. Woo! Unlimited food at Applebee's was where it was at, man. I used to go there all the time.
Dude, I've worked there. I know what their food cost situation is. I know what their margins are. I know what their overheads like. They're actually profitable chains. At least I remember them being. I'd have to look at their numbers again, but I would be bullish on Applebee's.
That's
It's
all right. So
especially as a recession play, because if you don't have a lot of discretionary spending, it's an inexpensive way to go out and feel like you've gone out and done something fun.
love that.
That's
The
true.
out there play of the day is if Applebee's goes public, we're bullish on it. There we go.
Not public, damn it.
They have
So what's up, Prunga?
it's Dine Brands that owns them, so DIN. I just was looking it up.
Oh, so they are
DIN,
public,
yeah.
but they're listed under a different. Okay, it's like a holding company or something like that, probably. I got you.
Yeah,
Kind of like it's kind of like Yum Brands. Yum Brands is Taco Bell, KFC,
right.
somebody else. It's probably similar to that. I'm guessing is my logic. Um, all right, so maybe you can be bullish on that ticker symbol. Thanks, Parunga, for that one. So Meta earnings were great. Obviously, the market sell-off was just gonna happen no matter what stock you're in. I think on Friday, but I know Meta was up like 11% afterwards. I think Microsoft was up at least like 5%. But then it had this huge pullback right after that. I don't know if you guys saw that with Microsoft. Like they could not hold their earnings run. They got pulled right down as soon as the market opened. It was unbelievable. And basically you're trading now at basically right almost a pretty similar level to where it was at before earnings even came out. Like it was trading at like 515. It came down a little bit more. Like it had a huge pump, and I was like, oh, cool. Like bullish on the market. We had Meta with a huge beat, Microsoft with a huge beat, and then all of a sudden it just got pulled right back off from underneath it. The one that ran Thursday after hours was Reddit. Reddit was up 17% on Friday morning.
I called that
it was
one.
at 19 at one point.
Oh man, I called that one for one reason only. Southeast Asia. They were moving into Southeast Asia. They are now in Southeast Asia, and I knew that their advertising revenue there was going to add a very nice amount to their balance sheet.
Yeah, look at that beat on revenue, a killer beat on the revenue, 17% higher on the revenue. They had a great earnings per share, beat that by 136%. Like, there was a great earnings report for them. That was absolutely amazing. So Reddit definitely is one of those companies, and their implied volatility is super high almost all the time. So if Perunga ever wants to do those like zebras or lizards or whatever, some pretty good volatility there for some juicy premiums, I would say, right, Perunga? I don't know if you've traded Reddit before.
I do. I've tried it a couple times. I like trading Reddit.
That's what's up, dude. I love that. So that's kind of what happened last week. Now we're talking about this week, right? So this week, the first big one that we know is Palantir. Palantir is coming up on tomorrow after hours. Do you guys really follow in a lot of Palantir? You think it's overvalued? You think it's undervalued? What are we thinking about Palantir? Anybody have any thoughts on that one before earnings come out?
All right, so a lot of people are going to disagree with me on this. Man, so I really think Palantir goes higher. I really do.
Okay.
And I don't mean just, and I'm not talking about like just off earnings. I'm just talking in general. I think Palantir goes higher, and by higher, I mean I think they go a lot higher. I think Palantir. I don't think that we even know half of what Palantir actually does, and I think that that's actually terrifying. But they're doing a lot of work with the Defense Department and a lot of foreign countries. And we all know that war is good business.
Right.
It doesn't slow down. You can never stop preparing for the next battle. So I don't really see Palantir retreating. Maybe people start selling and taking profits, but I don't, in the long run, I don't see Palantir going down. I only see it going up.
Yeah, so we got I pulled up the Warren Buffett Fin tool. Shout out to you, Warren Buffett, on After Hours. As always, love this calculator here. So we got a Palantir's expected move, 17.3%, upside 181 about, downside 127 with an IV of 123% here. I remember last earnings, I think they only moved about like 7 or 8%. If I'm not mistaken, when I was playing, I had a call credit spread on them. I was like, Palantir is so overvalued. Like, the PE ratio was like 600 at one point, which is like absolutely just ridiculous for a price to earnings on that one. So I did a call credit spread on that one, basically just going against the stock going up, and it did go down after earnings because the earnings were in line. But again, when you have a PE of 600 or anything high, like Tesla's like 150, I think, or something like that. When you have those high PE values, like, the market demands, like, you come up with some stellar numbers.
Right.
There's no way you'd be trading at a 600 PE ratio unless you're putting up phenomenal numbers. So I think Palantir is kind of in the similar ideas as like NVIDIA. Who was the other one that we talked about last week where it was it has to have a huge beat price. I'm trying to remember what stock we talked about it last week. I'm trying to remember what the stock was, but if you guys think about it, let me know. But it kind of reminds me of like the video where it's like Palantir could beat tomorrow across the board. And I think it probably will, but it depends on how much. If you get a small beat, you come right in line with expectations. Like, I don't know if the market's they're going to see how it's valued. They're going to be like, this is overvalued for what you're giving us. You're giving us a barely any profit margins comparatively. Like, they might take that as a warning shot, maybe, as in like it's overvalued potentially. So that's my only downside risk for Palantir would be it has to have a good beat across the board and not just like an average one. I think an average beat, this thing comes back down. I think a miss, it comes down a lot. And I think a huge beat, like you said, it can go up definitely relatively quickly. But yeah, over time, I think as more and more people start to understand Palantir, the better it'll be priced in for their future evaluations, their PE ratios, all that kind of stuff. I would agree with. Brunga, do you have any thoughts about Palantir? Anything that you've thought about, you traded before? Anything about Palantir you want to talk about?
Yeah, I mean, like, there's probably don't know everything that they do. It's a company that probably will keep going up. Whenever a company, has a huge run up, I'm always nervous to get in and make it back.
Right. Yeah, and they've had a huge run for the longest time, I believe. You know what I'm saying? Take a look and see the daily chart. Yeah,
Yes.
I mean, you have this huge red candle obviously for a pullback, but like it's been just like a straight up moonshot almost. It seems like here. If you take a look at it, like it's kind of just like Robin. Oh, that's the company we were talking about last week. It was Robin Hood, where I was like,
Robin Hood.
they're gonna beat, but
Yeah.
like, is the market gonna be happy with that one? So, and I know Robin Hood, I think, sold off the next day a little bit. I believe.
It
If I'm not
did.
mistaken. Yeah.
Yeah, it did.
So, it could be one of those companies where, it has this huge run up. The market's going to be demanding some bigger and better things in Palantir with their earnings call and stuff like that. And if Palantir delivers, I think we can definitely see it push higher up to that, those all-time highs at the 160s area. But again, there's a lot of pressure and a lot of weight on these companies, like you said, Purunga. When they run up like this much, the market demands valid earnings and really good projections, because that's what's fueling it. Is you got to evaluate this company long term. So wouldn't be surprised for a pullback, I think, for sure. What other earnings are there this week, guys? I forgot what else we talked about. There was other ones.
Did you get AMD?
AMD Tuesday. Yep. And AMD was another one. I think AMD is a really good stock to trade, obviously. Looking at a 14% expected move. Coming in at 196 high side, 147 small side. AMD again is in the chip spaces like NVIDIA is. I know people are talking about like comparing AMD to NVIDIA and like how they're doing. Remember how at one point, I think it was Liberation Day, they were down like $70 something. I think it was like $80. I don't know if you guys remember that or not. It was absolutely insane. And now it's over doubled that price since April in about 4 months, which I bought some shares at that point. But
nice.
Any thoughts on AMD? And you think AMD's going to get you think we're bullish AMD? You think we're bearish AMD? You think it's going to be, a coin flip? What are we thinking here?
Bullish.
Bullish. All right. Brunga, what are you thinking?
I have no idea. I don't know. I own shares, so I'm bullish in that way, but I have no idea.
I know AMD had a run last week, I'm pretty sure, didn't it? Look at this thing. Look at that. And there's your Liberation Day right there at the bottom at $80 or so. But yeah, I mean, it's had a straight up just moonshot. And I think even like the last like week or so, it's been just like straight up just like look at like it's just been on a nice tear the last like couple weeks. So the question is now, is it that they're pumping it up now to then have a pullback, or are they pumping it because they see the valuation? Those are definitely another ones to look out for as well. I think their earnings are after hours, I want to say. So that was something to watch out for on Tuesday. What else do we got here? Purunga, any stocks you're watching for earnings? Just, or any ones that you're curious about looking into a little bit more?
I was trying to think of what we looked at earlier. You said DraftKings. That's what we could look at. Maybe it's a cheaper.
Oh, no. It wasn't DraftKings. It was, who owns FanDuel?
Flutter. I think DraftKings also was on the list, though, when you were looking. But Flutter.
Okay, we'll take a look at DraftKings and see what DraftKings got. I mean, DraftKings is a tough one. We'll look at Flutter afterwards. We're looking at the gambling one now. Fish, what do you got to say? Anything about DraftKings or Flutter?
Well, you know what? Hold on. I want to go back and throw a little retraction on something that I said earlier. DIN? No, not bullish. No, bad. No, bullish, bad. Bullish, bad. Bearish. No, not bullish. Sorry, guys. It seemed good in my mind, and then I was like, I should pull up the chart. No, this chart looks terrible. Oh man.
Yeah.
It looks bad. But I mean, it looks bad, guys. Like,
oh my god, dude, look at this thing. Jesus. Yeah, don't. All right. So
again, I'd like to say not financial advice, but I am not bullish on this stock. Not right now. Now it does. I will say this: it does look like it has room down another $1.20. At that point, I would be interested in buying.
Yeah, for sure. All right, so good. I'm glad we circled back to that one. So I was like, what?
I felt that was important,
Yeah. DraftKings. So I know, Fish, we talk about, like sports betting and stuff like that. Do you have any thoughts on DraftKings? Bullish, bearish? What are you thinking?
I'm a buy. I'm an absolute buy. Guys, we just had the Hall of Fame game on Thursday. That doesn't mean anything, right? Nothing except for one thing, guys. One thing. We are closer to football season. What's the number one sport that's bet on in this country? At least as far as I know. Could be UFC, but at least as far as I know, it's the NFL. We are getting back towards preseason. Yeah, it's preseason, but you know what it does? It itches that zero DTE spy itch that you have on Sunday. You know what I mean?
Yeah.
In all seriousness, people love to gamble. And especially when you have your favorite team or you have this conviction or I'm sure this is going to happen. Dude, I am so bullish on these online gambling companies for sports betting. So bullish.
Yeah, the only problem that I've noticed, I think for the longest time, is that they've always had negative earnings per share. I don't know if they're going to be getting positive ones or not because they haven't been a profitable company yet. Which has been the only thing. It's like, okay, like that's probably why people aren't valuing it higher or not. But they are looking this is actually a huge quarter for them because right now we're projecting an earnings per share of positive, which is interesting. So, and it's kind of similar to what happened with SoFi. I believe it was last year at some point where people started buying up SoFi like $8, $9 because they came out with the earnings. I want to say it was one point in January of last year. The minute that it flips to a positive earnings per share means they're a profitable company, and people just started buying that thing up at $8, $9 because it's profitable now. Now they're printing money. Now they're going to have money left over instead of burning cash to expand. Now they're going to have money left over to then grow as a result and still have, that capital left over. So the fact that DraftKings now is looking at, again, so here's your negative earnings reports. Again, all of them have been negative for the longest time. This earnings here, if DraftKings comes in with a positive earnings per share, that could be super bullish, I think, for the stock because now you're a profitable company. And I've always loved DraftKings. I think it's a great user interface, just like Robinhood for stocks trading. I think DraftKings is a great user face to actually sports bet and gamble and stuff like that. The casino, they do a lot of promotions and stuff like that. I think that's a great company. If it comes in with a positive earnings, I think this is going to be a good move for DraftKings. I don't know what you guys think about that. I know we already heard Fish. Brunga, do you have any insights on DraftKings?
Once again, long shares on them. I use them for sports betting every so often and daily fantasy. Yeah, I think that overall have a good product.
Yeah. Do you think that if they come out with a positive earnings per share, you think that's going to just push the stock a pretty good amount? I think it's a really good. I think it's a bullish sign that are profitable to go from non-profit to profit. I think it's a pretty bullish sign for the market. So would you agree or disagree with that?
No, I think. I don't know about short term. Extremely positive. I think in the long term, if they continue to sustain that, that's definitely huge.
Yeah, 100% agree with that one. So DraftKings would be their earnings are on the 6th. I think it's after. I think they always do after hours. If I'm not mistaken. Yeah, after hours for earnings on that one. What was the other one? Flutter.
FLUT, I believe.
Do you know? FLUT.
And
Yep.
who is
Flutter
that?
Entertainment.
That's FanDuel.
Yeah, it's FanDuel's own. They own that. They're probably only monthly expirations. It's less. I think it's more expensive. It's not as traded as much. I don't know.
Okay. So monthlies are what? Is it the 15th? Yeah, the 15th. Yeah. So still a 9% move between now and the 15th. Obviously, we won't really know. But yeah. So I know. I use both. I don't know about you guys. When sports betting first became legal in my state, I downloaded both FanDuel and DraftKings. They had a bunch of those new promotions, and I was just raking in money. It was bet $5, get $100 in casino credits or whatever it was, and I would just start playing blackjack, rank up the money a little bit, and then I'd use that to go sports bet, and then I cashed out $200 from these guys. They do a good job. FanDuel is both a really good one, I think, as well. I don't know would you guys prefer one or the other one or not. I prefer DraftKings, but that's just me.
I've never used FanDuel. I just got stuck to DraftKings and never tried FanDuel.
Okay, Fish, have you used both or only one, or do you use something else?
Neither. I use Caesars.
Okay.
Oh.
Yeah, I've heard Caesars is a really big. They've been a really big one, for a lot of people to use.
I think people like Caesars because they remind me a lot of the Robinhood UI. It's more gamified than I would expect, which makes it more fun. When you deposit money, it's got, green confetti that pops out. It's like, congratulations.
Okay.
Oh, of
You
course.
know what I mean?
Of course they do.
Yeah.
I love that.
So,
This is a dopamine hit for you.
exactly. You immediately got the dopamine hit right as soon as you've deposited, and now you're feeling even more confident in your fucking zero DTE SPY that it's not going to $700 today because it's already at 500. Like
Yeah. Right.
Yeah,
Do they trade under? Are they under Caesars Entertainment? I'm
yeah.
guessing they are, right? Yeah. So they had a big miss in their earnings, though. Sadly, Fish, it looks like, but it's okay though.
Caesars. Oh, of course. So all of Vegas is dying right now. Discretionary income, right? It's like we always talk
Hmm.
about. Well, you know what? Maybe I don't need to fly from Wichita, Kansas to Las Vegas so that I can stay in an overpriced hotel room, have to eat in a restaurant every single night. Then, of
Yep.
course, the casino's there, and I mean, it's just everything adds up. And that's just not Vegas alone, but Vegas is a spot that you're going to spend a lot of money.
Right. And I also think it's one of those things also where like now that you have all these more like bigger online casinos coming up now, it's like you don't need to actually go in person to Vegas. You want to get that quick hit of playing blackjack, you don't have to fly away to Vegas or go to somewhere like some physical one. You just sign up on the DraftKings, put like $100 in, and just play blackjack. Some people like the thrill of doing it in person, but if you don't care about that, we're moving more to a digital space where you have DraftKings, where you have FanDuel, where you have Caesars now online. Like physical locations don't probably bring in as much maybe as what they used to because we're going more of a digitalized environment now, right? Like I've watched a lot of people do like private tables online. I know Stakes, another one that's been a huge up and coming online slots and gambling, you know, uh, account as well, or whatever you want to call it, business website. Like there's a lot of more online gambling companies that are going out there because if you're online, their overheads are probably super limited. They're probably super small. You don't have to pay for lease, you don't have to pay for gas, you
Right.
don't have to pay for electricity, you don't have to pay for water, you don't have to pay for a lot of these different things. You can just set up online, set it and forget it, and you're just raking all the profits, right? So a lot of casinos obviously are very, very profitable because of their business motto of having the edge in their favor. But I think physical ones, do I really want to go? Like my nearest casino for me is like an hour away. Do I really want to go an hour out of my way to go to the casino or just log on my computer, sit here on blackjack, make some dinner here that's going to be super cheap comparatively to going out to eat, play
Right.
blackjack, win a couple of hands, and then get my dopamine hit and peace out. I'm back in. I'm done in like 10 minutes.
See,
So
now in my state, we allow sports betting. We don't allow online casino gambling. We don't allow in-person gambling. However, you can go right over the state line, which is all around my state. And my state it's not a state. It-
yeah,
so,
yeah,
and you can go to you can go 45 minutes in one direction, 45 minutes in another direction, and you can hit 3 casinos.
There you go.
that's
You know,
crazy.
so yeah,
Yeah,
it's crazy. In
yeah. So
Tennessee, in
yep.
Tennessee, they don't allow casino gambling either. So the state of Virginia decided that what they would allow is they would allow casinos to be built right along the state border.
Uh-huh.
So that way they can entice people from
Smart.
other states to come in. Yep.
That's
Smart.
absolutely smart. Yeah, I love that. So we got DraftKings earnings. I didn't even know DraftKings was there. Thank you, Peringa, for bringing that up.
I don't know.
It's interesting that DraftKings earnings are this week. The ones for that own FanDuel are the same week also, and Caesars was just recently, so that they almost like put the gambling ones basically in the same section. It was like, yes, we all announce your earnings together and to see who's the best, obviously. We got Hims and Hers Health. I know Fish was talking before we went on this thing here. Fish is bullish on Hims, right? Fish, I believe, if I'm not
Yeah.
mistaken.
Yeah, no, I am. It just came out Friday that Medicare and Medicaid is going to start covering GLP-1, which is the weight loss drug. Which I mean, hey, that's a good thing. It statistically, people that are fit or at least not overweight have less health problems. So if
Yeah.
we can remove that from our Medicare and Medicaid system, that's going to save money on for the taxpayers in the long run. It's a great thing. It also improves the lives of the people that are getting it that need it. Beyond that, hey, let's talk about the market because that's what it's about. Sales, right? Well, sales increase profits, produce increased share prices. That's my thesis.
Yep, love that, man. Their expected move, by the way.
That and boner pills. I mean, hey.
Yep.
Love that.
And hair loss.
So expected move 25.6% according to the Warren Buffett Fin tool. 25% move we're looking at here.
So my way to play that, if I was going to trade that, and this is absolutely not financial advice, but my way to trade that would be the HINZ, the 2x leverage bull.
Right.
Okay.
Yeah,
that's my way of trading it would be and I mean, Perun could probably attest to this. I would do the iron condor at like around these strike prices because that's a huge move you're looking at. I feel like it won't move 25%. You get iron condor around like 78 and 46, and basically saying, hey, don't go to 78, don't go to 46. I would be curious to see what the payout would be on an iron condor like that because I wouldn't mind trading that. I might look at it tonight before the market opens tomorrow morning and open it up. Because I mean, that is a huge move. I know they had a huge move last earnings, but 25% move, I don't know if that's going to be feasible for HIMS on their earnings.
Huge.
It could be. Huge. It's a huge move. So this might be the one time where, like, right before market closes tomorrow, iron condor would be good because your IV would be super high through the roof, and premiums are going to be super juiced up before earnings here. Might look at a little possible iron condor here between like 70, 78 and 46 maybe. Bring in the animal selling option strategy here, see what the return's going to be on that one. But that is a crazy move, Perunga. I don't know if you agree with that kind of thesis or you would be like, nah, like it's possible. What are you thinking?
No, yeah, I mean it's definitely a smart way to play it. But of course, IV is going to be high, so it might be hard to get a full iron condor, but you're going to have an IV first, so it could be you could well.
Yeah, I would really want to look into that and see. Like, I'll probably go simulate it tonight after I get off of this podcast. I'll probably go look at Robinhood and build one and see what it looks like and put it in Discord here to see, just kind of see what it looks like, and I'll make sure to tag you guys in it. Because even if like the payout, right? If the payout is like $15 from $100, that's still a 15% ROI. Like, that's phenomenal. That's a phenomenal return in 1 day trade, in 1 week's worth of trade, right? So, that wouldn't be anything too crazy to take a look at. So HIMS. Definitely a good one to look at. There are other ones that we talked about. I think it was AMD. We've got Arista Networks, which is another one that's an AI play. If you're looking at playing that one, there's another one that we talked about. We got Wednesday's a big one. Wednesday we have quite a bit. We got McDonald's, Disney, Novo Nordisk, Uber, Shopify, AppLovin, DoorDash. My hatred for AppLovin. Because of the Robinhood trivia from I think it was like a year ago. You guys remember that trivia thing we did?
Yeah, I do remember that. Yeah, that was one of the answers to like the biggest gain, right?
Yeah, Fish. Remember that? Fish. Do you remember doing that Robinhood trivia they did last year? It's pretty cool. Remember that? I don't know if you were.
Yes, I do.
Yeah. And do you remember how I got the last question wrong on it, and I would have won like $1,500 in Bitcoin?
Yes.
So annoying.
My God, dude.
I've never even heard of this company until they were like 700% gain. And I was like, what are you talking about? 700% gain in a year? Are you out of your mind? And sure enough, it was right. I was like, oh, pain. that was nice, but it's all right though. So yeah, McDonald's would be a good one to see, obviously for it's a discretionary spending, right? Fish talking about fast food and stuff like that, kind of seeing how they would do.
So
I believe.
Here's my little thesis on McDonald's. I gotta be short and sweet here. I got daddy duties coming up here in about 10 minutes. So McDonald's, they were somewhat recently downgraded by $50 for their 12-month price target. I believe that was about 6 weeks ago or so, maybe 2 months ago. So that's not good. Bringing back the snack wrap, that is a good thing. That's really, really taking off really nicely. Consumers are really pleased with it. And I think that it really could be very, very helpful to them. They need to get their costs, or not their costs. They need to get my costs down because going there for myself, my wife, and my child, dude, that's like $30. And for $30, I might as well take us to go to Five Guys, or Shake Shack or something like that.
Right.
Yep. There's a lot better places to get the much better quality of food for the same amount of money, or just a couple of dollars more, which, if you're getting much better food, is worth it.
Right. 100%. Yeah, I mean, I think the snack wrap's going to be a big play for them because everyone's going to ask about that for a long time, and they now deliver on it. I think it's an absolutely amazing, thing they brought back there. But yeah,
they're inexpensive. I'm sorry to cut you off, but they're inexpensive. That's the kicker, right? So they're inexpensive to the consumer, but they taste good. They're fun. They're easy because they're single handheld, unlike a Big Mac or a burger or a fish fillet sandwich, right? Or chicken nuggets because you got your dipping sauce, right? So that's something that's super easy to just go about. And again, like I said, it's cheap. What are they, like $2 or something like that?
Something like that. Yeah, they're super, super cheap, dude. I haven't gone to McDonald's in a long time, but yeah, no, they're super, super inexpensive comparatively to like a whole meal. I'm almost certain.
Right.
So I would agree with that.
Yeah. Sorry to cut you off.
No, dude, you're good, dude. I mean, so, obviously, since new fish is going to be getting out here about 8 minutes or so, we will wrap it up in about like 5 or so minutes, just to make sure that Fish has plenty of time for, to go take care of his daddy duties, as you said here. So what we'll kind of do is we'll kind of do a quick little, just wrap up here and just kind of fire off, bullish, bearish, whatever you want to think about for companies overall here, because these are some big earnings here. We're taking a look at like Uber, for example. Fish, bullish and bearish on Uber. I don't need a whole paragraph. Bullish, bearish on Uber long term. What are you thinking right now?
Bullish.
Brunga, what are you thinking?
Probably bullish.
I would say so also. I think the one thing I will say, a quick note about it, they're partnered with Lucid, I believe, recently. It's a really, really nice thing to see for them to do. So I'll be curious to see how they talk about their guidance for Uber moving forward for that one. DoorDash, bullish or bearish? Fish, what do you think?
Bearish.
Pruga?
If they're making money, that's a good thing. But if they're not, then no.
Yeah, I know it's just the fees, guys. Those fees are killer for those like delivery services. It's like taxes, then delivery fees. Like it's wild to me.
DoorDash has just not cared about messed up orders for both my account and my wife's account so many times over the past few years. Their customer service has gone down incredibly, and we find that they charge more in fees than Uber Eats. So we both actually deleted our DoorDash apps.
Wow. Okay. What else do we have? I think, was it Airbnb also the same day? Airbnb. I know Fish already said he was bearish on that one, I believe, right, Fish? You don't like Airbnb,
Correct.
right?
Bearish. People are moving away from it. They don't like the hidden fees. They don't like the hidden cameras. They don't like all the rules. More people, if they are doing discretionary spending, they're moving back towards hotels.
Right. Purunga, bullish, bearish on Airbnb. What are you thinking?
I'd say neutral. I have no idea.
Okay.
Yeah, they're like what Fish said. I mean, I think people are kind of tired of it becoming more of a business instead of like, I got a spare room to rent, which is what it was intended to be.
Right.
I think Fish made a good point though, and I was saying the same thing. As soon as you started talking about it, it's like Airbnb becomes so expensive that now it was a cycle, right? Everybody who bought hotels, Airbnb comes in the picture. Everybody does Airbnbs now, right? Now Airbnb is so expensive. Now they're going to circle back to hotels again until Airbnb figures out a way to make theirs cheaper, and it's going to just be a vicious cycle, I feel like. So I would be curious to see in the future how hotel earnings do, like those big hotel companies.
Yeah, like your Marriott, your Sheraton,
yeah,
whoever their parent companies are.
Yep, something to think about definitely for sure. Anything else? Eli Lilly, bullish, bearish, medical company. Anything we're feeling on that one?
For earnings?
Yeah, I mean, we talk. Well, I mean, I guess they're kind of in line with like Hims, right? Where it's like you have the Medicare, Medicaid thing with the weight loss drug. They're like one of the, they're the biggest market cap company in terms of share price, or in terms of share value of medical and medicine stuff. So
I feel obligated to say bullish because this is the Kingdom Roundtable, and well, royalty trades. So I think I have to say bullish.
That's what's up. Brunga, any thoughts on Lilly and company?
I mean, if that forecast is accurate, that's a good sign. That's a bullish sign for sure.
That is a crazy good forecast. Yeah, for the earnings per share, 392 per share, now 561. That's a crazy good.
If that misses, it's not a good.
Correct. And I feel like that's really, I mean, honestly, that's really about it, I think. Take a look really quick, see if the futures are open here. Oh, look at that. Just for you, Fridge, futures, or Fish. Looking at futures, Dow up 0.01, S&P right now 0.01, NASDAQ 0.04. So not really much movement in the futures. Let me just refresh it really quick and see. Yeah, so not much movement in the futures right now for us as we're getting ready for the market tomorrow. We will wrap it up here because obviously, Fish has got some duties to take care of. And also, we want to give you guys some time to prepare for the markets and everything else here. So we appreciate you guys, obviously, as always, for tuning into the Kingdom. Hopefully, get our boy Royalty Trades back in here next week. I know he's enjoying his vacation, which is well deserved. Any parting words, guys, for you guys, or you want to just kind of call it here, whatever you guys want to do? Fish, any parting words, or you're just ready for the week?
Yeah, be smart. Do your due diligence. Don't get scared. Don't FOMO. Don't panic sell. Don't panic buy. My philosophy is I hold companies that I believe in long term, and if the price goes down, that gives me an opportunity to DCA. I'm going to say it again. I've been posting it. PSTV. Take a look at it. It's done very well for me. I believe that it's going to go to do very well. There is a 12-month price target of anywhere from $3 to $20 on it. Currently trading at 58 cents. I started a position on it 625. I'm currently up 70%. I have 511 shares. I am going to triple my, I'm going to buy an extra 300%. So I'm going to quadruple my holdings. Just looking for a pullback because it's sitting at a it's sitting at a resistance zone and then a support zone. So I'm waiting for either the support resistance flip or a pullback, one of the two. But guys, put it into your chat GPT, do your own due diligence on it. PSTV.
That's what's up, man. Love to hear that for you. Appreciate you as always, Fish, for that one. Purunga, last minute thoughts, anything before we wrap it up here? We call it another week in the Kingdom podcast. Anything that you would like to tell the viewers at home, or if you want to just plug your own stuff to grow your channels, feel free to do that as well. Up to you.
Yeah, no, just like Fish said, be smart. And I know Carly's mentioned it before. We're not gonna, need to like panic and sell and try to buy in at a lower price. To catch the falling knife is very difficult. So it's better to just hold and wait it out, especially if you believe in the company long term.
Yeah, man, absolutely. You guys heard it here first. As always, you guys were able to sit in for another week of the Kingdom podcast. Hopefully, Royalty will be back here because I love having him, obviously, with his insights and his charting because I can't do the charting like he does. I just pull up a bunch of pages and hope for the best to kind of cover it there. So thank you guys, obviously, so much for tuning into the Kingdom podcast. As always, make sure you check out New Fish and Purunga, Bridge Financials, as usual. Hopefully, get a bigger crowd next week in terms of people to be on here. And as we always say, make sure you tap in whenever you can. You guys have a great rest of your evening, and we will see you guys back here next week. Take care.